Welcome to the Elion Forex YouTube channel. We are back again with another educational YouTube video. Shout out to everyone who has been showing us love, who has subscribed to this channel, who has been liking our videos, dropping their comments, and even sharing this video with their friends. You are the real MVP. So without wasting much time, today I'm going to be talking about how to trade counter trend trades. So before we go straight into it, I would like to implore those that are here to subscribe to this channel, please hit the subscribe button, please like this video and share with your friends. So let's get straight into it. So today I'll be talking about how to get counter trend trades, and you would agree with me that it is a generally accepted rule to always trade in the direction of the trend in the forex market, which is absolutely correct. It is very, very correct. But for someone like me who happens to be an intraday trader, that might not always be the case. And the reason being that, sometimes, let's say, for example, the market is trending down and you want to catch sell trades. So, you don't just enter sell trades anyway. You wait for the market to come to your zone or to your point of interest or whatever you trade, and you wait for the market to come there and you take your trades. So it could take forever for the market to get to your point of interest in order for it to change direction of the trend. And not just that, that retracement move could be a 50 pip move, it could be a 60 pip, 70 pip, and even as high as an 80 pip move. So the question is, do you really want to miss out on all these pips? So if you ask me that question, my straight up answer will be no. I would not want to miss out on that opportunity. But remember, I would only enter if the market presents to me an opportunity that fits my trading plan. So let me show you how I was able to get a 1 to 10 risk to reward ratio on a counter trend trade on GBP USD yesterday. So remember, the first thing we have to do when we come on the chart is we need to understand the order flow of the market. Where is the market going to, or where is the market trending to? Where are the big boys, where are the big banks trading to? What direction are they trading to? So now if you look at your daily time frame, I talked about this in the last video I uploaded, how to identify order flow just using daily candles. So if you look at the daily candles, you will see that we have our eyes untouched. And remember, if we are in a bearish order flow, we want to see our eyes untouched, or worst case, we want to see them manipulated, not broken. So now we can see that our eyes are untouched. So these are signal to me that we are in a bearish order flow. So if we are in a bearish order flow, where would I be looking to enter my sell trades? So now that will take me to my 1 hour time frame. So on my 1 hour time frame, I could see that if I want to enter sell trade, this will be the order block where I'll be looking out to sell from. And the reason why I chose this as my order block was because we could see that this was the impulsive move that broke this structure, and we left another block inside this week. So, but that is not the scope of today's video. I could do this on another video. I could talk about this on another video. So this was the other block I was looking to sell from. And at London Open, I could see that price was around this place. And if I should measure how many pip it is, so that means price will have to make like roughly 85 pips, or let's say 80 pips move to get into my order block. So but I don't really want to miss out on all these 80 pips, and because I know that there is a high probability that the market is going to trade into my order block before continuing the trend, if the trend will continue. So I was looking to take the retracement into the order block. So, and I must also point out to you guys that the way I approach my trading, I like to approach my trading with a daily mindset, because I try to look at what the market is going to do, or what the market could do in a particular trading day. So on waking up to the London session, I could see that from the previous day, which was Monday, was it Monday? Yeah, from the previous day, we could see that the market created all these equal lows. And not just the previous day, we could see that even during the Asian session of yesterday, the market traded into the low, still creating equal lows. So I already saw this as a liquidity build up, And remember, I like to regard liquidity as fuel in the market. So I saw this liquidity build up, and I was expecting smart money to take the liquidity and drive price up. So my bias for the day was bullish, even though we are in a bearish order flow. Remember, I cannot just sell from here because I know that we are in a bearish order flow. I still want the market to come into my zone. So, but before then, I need to see the market come into my order block in order for me to look for my sales. So I'm trying to catch the retracement into the order block. So I saw this liquidity build up with this equal lows, and I saw the market run out to those equal lows. So after running out this equal lows, this was pre-London. So London session open, I was looking for my trade, and I used the 5 minutes time frame downward for my entries. So on seeing this, all I just needed to identify was to identify breaks of structures, and I was able to see that we had our first break of structure here. Let me on this. So we had our first break of structure right here because we broke this high with this week. We broke the high. So, and after breaking the high, we had a mitigation play. I love to see this. We had this mitigation play. The market reacted nicely into this other block and broke structure again, leaving a fresh new other block to trade from. So this was where I got my first trade for the day. But unfortunately, and I was targeting this highs, that is this other block where I'm expecting the market to sell from. But unfortunately, I got stopped out at break even, as you can see, because immediately the market broke this high here, I moved my stops to break even. I moved my stop to break even. So unfortunately for me, the market hit break even. I shared this trade on my free Telegram channel. So you can see the link in the description if you be interested in joining the free Telegram channel. So after seeing this, I broke even and the market stopped me out on break even. And it did not just stop me out on break even, it stopped me out on break even at the London and the New York Open, the New York session open. So, and I knew that we are still respecting this order block. As long as price does not break this order block, my bias is still bullish. So I still kept looking for my buy trades. So immediately I saw this, this was on the 5 minutes time frame. I scaled down even further down to the 1 minute time frame to inspect what price is doing. And on inspecting what price is doing, I saw another break of structure. I saw another break of structure, and let me show you. I saw that the market broke the highs of this week as a break of structure. We had this break of structure, and after the break of structure, I want to see a mitigation play, and I saw the mitigation play right here. I saw this mitigation play. The market coming back into the other block, rejecting it and breaking new structure. So I knew that this was my entry confirmation. So I think I entered on 25% of the fib. I entered my position on 25% of the fib. So this was the entry, and my stop loss was a few pips below the other block. And to be honest, I was targeting these highs right here. I was targeting this high because this was the point where I was expecting the market to sell off from. So I was targeting these highs. But before we get to this high, this high is a far reach. If the market has gotten to this side, this would have been a roughly 1 to 20 risk to reward ratio, which is a very far reach. So I use this as my first take profit, and the reason why I use this as my first take profit was because we could see that we had this relative equal highs right here. You see that we had all these relative equal highs right here. Let me mark it out. So I knew that there is a possibility that we could just take out these highs and the market would just drop back down. So this was where I used as my first TP. So at this point, I took out 80% of my position. I did not close on my position because my ultimate take profit is still right up here. So I closed out 80% of my position right here and I left 20% to run. And immediately I closed out, the market shot up a little bit before eventually dropping back down and stopping my 20% at break even. So imagine if I had not taken out 80% of my position here, I would have just had a break-even trade, even though I saw all this profit. So I was stopped out at break-even, but I did not really care because I had already taken out 80% of my position. So that was how I was able to capitalize on a counter trend trade yesterday. So remember, I like to approach the market with a daily mindset, like a daily mindset. So, and I was able to see, just a recap now, I was able to see that, we had build up of liquidity here. So, and and my ultimate bias was to trade a buy trade into the sell order block so that we can continue the trend. So this liquidity build up was like the first confirmation or the first alert to me that, okay, this could be a possible retracement, or this could be a possible reversal to the upside. So I was expecting smart money to take out this liquidity, and not just take out the liquidity, break structure after taking the liquidity, and that was what we had there. So even though my first trade got stopped out at break even, I still did not allow that to deter me, as I was still able to get a buy trade during the New York session. So guys, that was how I was able to capitalize on the counter trend trade, getting a 1 to 10 R yesterday on GBP USD. So if you would like me to talk about anything, maybe you have a video suggestion, please drop it in the comment section. If you would like to ask a question, also drop it in the comment section. And please don't forget to subscribe to this channel. Please subscribe to this channel and like our videos, and also share with your friends so that we all can grow together. So that will be all for now. Until the next video, I wish you a success in your trading journey.